Hello everyone, I'm Pat Acosta, Senior Manager of RG Manabat and Company, a member firm of KPMG International. Welcome to RG Manabat and Company Insights, where we decode tax updates that matter to you. The hot topic now is the Capital Markets Efficiency Promotion Act, or CMEPA. During our last episode, we discussed the CMEPA provisions on passive income and documentary stamp tax. For today's episode, we'll be discussing stock transaction tax, personal equity and retirement account or PERA contributions, and excise tax on pickups. And joining me today is Eugene Pulga, one of our tax principals of RG Manabat and Company.
Thank you, Pat. I'm excited to be here and I'm looking forward to sharing my insights today.
Let's kick things off with stocks. Eugene, CMEPA eventually reduced the stock transaction tax from 0.6% to 0.1%. What's the story behind this?
That's right, Pat. Under the CMEPA, the stock transaction tax or STT will drop significantly to 0.1% of the gross selling price or gross value in money of shares sold, exchanged, or disposed of. This lower rate applies not just to shares listed on the Philippine Stock Exchange, but also to shares of dual listed companies, meaning companies listed both locally and abroad, even if those are shares of a domestic corporation.
Interesting. So shares listed in a local stock exchange and domestic shares listed in a foreign stock exchange are covered by stock transaction tax. But what if the shares are sold by a dealer in securities? Are these still subject to stock transaction tax?
Okay. Excellent question, Pat. If a dealer in securities that is listed to buy and sell shares for their own account in the ordinary course of business sells listed shares, any gain is treated as ordinary income instead. So instead of paying the STT, the dealer pays tax on the net income from the sale under normal income tax rules.
So who's responsible for paying and filing the STT for regular investors?
Okay. Primarily, it's the stockbroker who collects and remits the STT to the BIR within 5 banking days from collection. However, if we're talking about shares of a domestic corporation listed and traded on a foreign stock exchange, the responsibility can fall on the selling stockholder directly or through their broker or authorized representative. And in that case, the remittance deadline is a bit longer. That is 10 banking days from collection.
Okay. Thanks for clarifying that, Eugene. Now let's talk about PERA. How does CMEPA change things for employers?
Okay. Paras getting a nice boost under the CMEPA path. Private employers who contribute to their employees' PERA account can claim an additional 50% deduction from gross income provided a few conditions are met. First, the employer must contribute an amount at least equal to the employee's contribution. Second, only employers who contribute to all their employees' PERA accounts are eligible for the deduction. And third, the employee must contribute either before or simultaneously with the employer's contribution.
That's very clear, Eugene. It's a good incentive to encourage broader retirement savings for the workforce. Now, lastly, let's talk about vehicles. Pickups have been in the headlines lately, so how does the CMEPA affect pickups?
Okay. One of the significant changes under CMEPA is removing pickups from the list of vehicles exempt from excise tax. Before, pickups were exempt, but CMEPA now subjects them to excise tax similar to other light commercial vehicles.
Now, that's really going to shake up the auto industry. Are there any compliance requirements for manufacturers and importers?
Yes, absolutely. Under the draft regulations, manufacturers, assemblers, and importers must first file an updated sworn statement for each brand and model of pickups as of the day before the regulations takes effect. They have 15 working days to submit this to the BIR. Also, they must submit a duly notarized inventory list of all pickups, whether completely built up, completely knocked down, or semi-knocked down in plants, warehouses, customs premises, or even in transit, for which import entries were filed on or before June 30, 2025. If they don't submit the list, it would be presumed they have no inventory on hand or in transit as of that date.
So it's actually crucial for vehicle businesses to stay compliant to avoid hefty penalties or unintended tax liabilities.
Yes, exactly, Pat. These changes could also affect vehicle prices for consumers, depending on how the excise tax computations play out.
Thanks, Eugene. That was a power-packed session on STT, pero contributions, and excise tax on pickups. For our listeners, if you'd like to know how these changes impact you or your business, you may reach out to your trusted tax advisors or us here at RG Manabat and Company. That's all for today's episode of RG Manabat and Company Insights. Again, I'm Pat.
And I'm Eugene. Thanks for listening.
To stay updated, don't forget to subscribe.